please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back to The Rundown. We're looking at a positive lead-in to kickstart this Asian trading day with the Dow closing above 23,000. When it comes to US bond yields, we're looking at the 10-year at 2.3447. Let's get you the full bond market report now with Rick Santelli.
Good morning, Asia. Good morning, Australia. September housing starts and permits were on the weak side. And if we look towards tomorrow, leading economic indicators, Philadelphia Fed Index, and of course, initial and continuing claims. Maybe most important, October 26th, next ECB meeting. You notice how the foreign exchange market volatility that was so crazy not that many weeks ago is tapered off? Pretty much that's probably the reason. And if you look at the formation of euro versus dollar, it looks toppy. You look at the dollar index, it keeps trying to go up, but it can't hold it, can't get above 94. It gave away its gains today. Towards the end of the session, down 1/10 of a cent. A lot of that may change after we get more detail on the word longer from Mario Draghi. Quantitative easing, maybe less for longer. Rates, lower for longer. That is going to have a huge impact potentially on the market. As for today, the long end woke up. 10s and 30s up 3 and 4 basis points respectively most of the day. The short end maybe up 1 basis point. So whether you were looking at 2s to 10s or 30s to 5s, they each steepen maybe a couple of basis points. But 10s to 2s steepen from the flattest they've been since the summer of 16 and pretty darn close to 10 years on 30s minus 5s. One other issue, stock market. Stock market, the Dow was cooking in grease today, triple-digit gains. The S&P was in positive territory, but not near the intensity of the Dow, and the NASDAQ drifted lightly into negative territory. A very interesting setup. Tomorrow, of course, not only do we get the data, but we will continue to try to handicap how some of the most recent comments by this administration generally and the Treasury Secretary specifically bundling up the tax policy outcome with the stock market. Whether it's a good or bad idea is something to ponder. Reporting from the CME Group Trading Floor, I'm Rick Santelli with CNBC Business News, Chicago.
Financials, one of the best performing sectors on Wall Street overnight, including Wells Fargo, which was up 0.4%. But it has not been a good year for Wells amid ongoing headlines about their fake account scandal. Wilfred Frost sat down exclusively with CEO Tim Sloan overnight and asked whether he had earlier withheld information about the true scale and nature of cross-selling at the bank.
We disclosed our cross-sell ratios in the normal course. It was a non-GAAP type of a measure. I think cross-sell is shorthand for relationship management. Clearly, there was an issue that we had within our retail banking business in terms of our incentive plan and the focus on selling products as opposed to providing the right service and advice to our customers. That wasn't elevated to the senior leadership, including me, until late in 2013.
Well, that's true, and very clearly in late in 2013. I mean, so the board review says you were aware before then, but you weren't fully aware of the magnitude in 2013 until 2013. November 8th, 9th, 2013, the Chief Administrative Officer in an email with you notes, we're trying to limit the damage of further terminations in the short term, hoping the LA Times story doesn't become national. Goes on to say the larger sales practice review needs to be done. So as you said, very clearly, you're up to speed on how big an issue this is then. Yet the following earnings call, Q1 2014, you mentioned cross-sell 5 times. And again, selective release of information there to investors. I'll go just one step further, if I may, Tim, because even 3 months before this became public, you were COO and president at that point. You've been involved in firing Carrie Tolstead or pushing for her retirement at that point. So again, fully aware of everything. You were asked in an interview, June 16th, 2016, public interview, whether the cross-selling strategy had been pushed too hard, and you said no. I mean, what do you say to the investors that bought, reassured after 3 years of negative press on the cross-selling issue, read that interview from Tim Sloan, someone they trust, and were reassured about it for 3 months later to see that it was in fact a lie at that point, and the share price underperformance they've endured it since.
Well, let me push back there. I didn't lie to, and I don't. I didn't lie to our shareholders. I didn't lie to any of our stakeholders. What I described was the fact that cross-selling, which is shorthand for good relationship management, there's nothing wrong with good relationship management. What we clearly had, and what we've talked a lot about, and you and I have talked a fair amount about it, is the fact that we had an incentive plan in our retail bank that drove inappropriate behavior. Since I've become CEO, we've dealt with that.
Sure, and we're going to come to that. This is the question you asked. On the topic of cross-selling, Wells has come under scrutiny for its strong sales culture. Is there any sense that the bank has pushed that strategy to the limit? No, was your response. Is that not misleading investors 3 months before this came out?
No, I don't think it's misleading investors at all, because I think the issue...
Is there any sense that the bank has pushed the strategy to the limit? Your answer was no.
Yeah, again, we're talking about the bank. We had an issue within our retail banking business, and we've dealt with that since I've become CEO.
Okay, but I beg to differ. I feel that investors watching now who bought the stock then and have endured significant underperformance since then because of an issue that you denied about will be feeling hard done by based on that. But
Wilfred, you and I agree on a lot of things. We're going to disagree on that.
Samsung Electronics looking to make a splash with a new Internet of Things strategy. Samsung kicked off its developer conference in San Francisco overnight, announcing Smart Things, its push to unite IoT devices and services. Also taking centre stage, Bixby 2.0. That's their answer to Siri, Alexa and the Google Assistant. And this comes as Samsung looks to replicate the huge success of its mobile and semiconductor units and become a serious player in software. Guidance last week showed the company expecting a record $12.8 billion Q3 operating profit. Shares are up over 50% this year. Let's bring in Bob O'Donnell. He is founder and chief analyst of Technalysis, live from San Francisco. And Bob, I wanted to start on Bixby 2.0 because this comes just 6 months after the initial release of Bixby. Do you think this update really reflects this notion that that first version just did not cut the mustard for Samsung users and against its competitors as well?
Well, Dan, the issue actually is that right before Samsung announced Bixby, they had bought this company Vive, and Vive was started by some of the people who originally created Siri. And actually what we're seeing with Bixby 2.0 is the integration of that Vive technology into Bixby. So I think it's more important to think of it as an expansion of things that they couldn't do before. And the big thing with Bixby 2.0 is the ability to open it up to other developers. In the past, you couldn't have third-party applications really take much advantage of it. Now you're going to have that capability. And, oh, by the way, theoretically, to address your point, yes, my guess is we'll see better performance because the first round, was okay, but it really wasn't that great. But this will be very interesting to see if other application developers, which is why they showed it at the Samsung Developer Conference, will build on this and create new applications using Bixby at its core.
So what makes this voice assistant better than the likes of Alexa or Siri?
Well, that still remains to be seen. I mean, this is just an early beta that they're going to have of 2.0. Conceptually, what's interesting, again, is this opening up so other people can tap into it. Amazon has started to do that with Alexa, so that's obviously something that they can bring to the table as well. Apple hasn't been quite as open yet with Siri. They're starting to. But I think that's going to be the big step. The other big thing with Bixby at this particular juncture is the fact that Bixby 2.0 is also going to be available on Samsung TVs, on their smart fridges, and other devices. So what we saw here today was really this wide expansion of where Samsung wants to take Bixby into a much wider range of devices than we've ever seen from them before.
So it is fascinating to see Samsung attempting to replicate that Apple model and lock users into an ecosystem by implementing Bixby into things like those smart TVs, which are going to be shipping in 2018. Do you think that is the right strategy here?
Well, no, I mean, obviously, I think the lock-in question is a difficult one, and I don't care if you're Apple or Samsung or anybody else. The reality is, in all of our homes, all over the world, we have a combination of products. We have some from Amazon, some from Apple, some from Samsung. That's just the way the world is. So we have to think about interoperability. And I will say, again, remains to be seen how they do this, but to Samsung's credit today, they started talking about this idea of seamless interaction across devices and independent, so they said, of platform. So theoretically, you could walk in, you know, you're watching something on your phone, it immediately transfers over to your smart TV, and all of this can be controlled via voice. It's an intriguing vision. It's going to be hard to implement and hard to execute, but I'll give them credit for at least throwing out where they want to go.
Bob, unfortunately, we're out of time. We'll leave it there. Thanks for joining us. That's Bob O'Donnell from Technalysis. Let's show you the top stories that we're following today. And first up, the Dow crosses yet another milestone, closing above that 23,000 level for the first time ever. IBM's 9% jump is behind today's push. Also this morning, after the bell, disappointment over eBay's earnings forecast, while American Express CEO Kenneth Chenault says he's stepping down.
And good morning, Dan. Good morning.
He's stepping down.
And good morning, Dan. Good morning, everybody. Live in Beijing, I'm Martin Sung at the Chinese Communist Party's 19th Congress, where today it's all about the economy. We've got a clutch of data coming out later this morning, including GDP. And for President Xi Jinping, the delicate task of managing a slowing economy while maintaining stability.
Let's bring in Hampton Pearson. He joins us again now with a look at this quick march to 23,000 for the Dow. Hampton, good morning to you. What was it? 54 sessions? It happened pretty quick.
You got it. Yeah, hello again, Dan. It is official, and it happened on Wednesday. The Dow closing above 23,000 for the first time with a surprise boost from IBM. Its latest earnings report hints at a return to revenue growth after a long absence. Shares of IBM, which beat expectations on revenue, jumping basically 9% and accounting for about 90 points of the Dow's 160-point gain in the blue chip index. IBM's gain adding 89 points to the industrials, but even with that surge, Boeing was still the biggest contributor to the 30-member index since the last 1,000-point milestone. So as you mentioned, it took just 54 trading days to go from Dow 22,000 to 23,000. And it's the fourth Dow milestone this year. Leading analysts say retail investors are returning to the market. Other keys to the rally: Wednesday marked the blue chip index's 4,000-point milestone this year, largely uninterrupted stock market rally. The Dow rose 160 points, 23,157.60, the official close, the largest one-day advance in 5 weeks. Third quarter earnings season has gotten off to a strong start. Investors saying of the S&P 500 companies that have already reported earnings so far, more than 80% have beat analyst expectations. So, combination of solid earnings, stronger economic growth, and hopes that President Donald Trump may be able to make progress on tax cuts are also key factors going forward. On this historic trading day, about 5.6 billion shares changed hands, below the 5.9 billion daily average for the past 20 days. Dan, back over to you.
Hampton, thank you again. Meanwhile, back at home here in Asia, we are waiting on a key data point out of China today. Q3 GDP will drop at 10 a.m. Reuters is forecasting 6.8% for Q3, 1 percentage point off the 6.9% recorded over the first half. PBOC Governor Zhou Xiaochuan last week said he expected the Chinese economy to grow at 7% for the last 6 months of the year. Let's get over to Martin Sung live in Beijing. And Marty, the message from President Xi yesterday was an economy that looks to be more open and open and open. But at the same time, the focus also appears to be more so on reforms rather than growth.
Indeed, that's right, Dan. Good morning, folks. And before anything else, though, we'll get back to the economy and those GDP numbers, the Q3 numbers, in just a bit. What I want to show you now is I want to locate you to give you a sense of where exactly we are. Obviously, we're in the capital, Beijing. In front of me is the Great Hall of the People, where the business of today is Congress and delegates have basically broken up into smaller groups to talk about Xi Jinping's work report, which is that massive 3.5-hour speech that he gave yesterday. Just behind me, as you can see, is the Chinese National Museum, and if I can get my cameraman Shah to pan a little bit, I'll show you Tiananmen Square. The music you heard just a couple of minutes ago when we were doing the headlines, that was the Chinese national anthem, March of the Volunteers. They play that without fail every day, right on the dot when the sun rises. And all the hundreds of people you see just below there in Tiananmen Square, this is, remember, not just an iconic place, it is also a place, almost a pilgrimage for a lot of common Chinese. If they do visit Beijing, this is a must-see destination and spot there. So the flag raising and the national anthem, that just happened a couple of minutes ago. That was the music you heard when we were doing the headlines. But back to the economy. Yes, very, very important. Xi Jinping's delicate task right now, as he goes into his second 5-year term, is managing an economy which is slowing while trying to maintain social stability. This is key for a country like China, 1.4 billion people, creating enough jobs to keep people satisfied and fed and off the streets. Now, that Q3 GDP number comes out at 10 sharp. Roundabout, that is, should come in at about 6.8%. We're also going to get a clutch of performance data, performance indicators for the economy, FAI, fixed asset investment, retail sales, also industrial production. But there is hope that perhaps in the second half of this year, things could start picking up for the Chinese economy, because as you referred to a couple of seconds ago, Dan, the central bank governor, PBOC governor, Zhou Xiaochuan, said just a couple of days ago that he expects the economy to pick up to about 7% growth for the final 6 months of this year. But again, reform continues. That is a big challenge for President Xi Jinping, including reforming state-owned enterprises. Many of them are still fat, bloated, inefficient, and laden with debt. He needs to figure out a way to make them more efficient and to cut down that debt. He referred to making them stronger and better, but also bigger. This is the key word that has a lot of people, including foreign investors, a little bit worried here, because in M&A, two companies come together, they merge, you get one bigger one, right? In China's case, the risk is you get two weak, inefficient state companies, you put them together, and all you get is one bigger, inefficient state-owned company. So it's got to be done, I guess, the right way, Dan.
Well, let's expand on this. Marty, stay right there. I wanted to bring in Yoon Ung. She is the Director of Broadridge Financial Solutions and joins me around the desk at the SGX this morning. Yoon, great to get you in. Thank you. What's your takeaway from President Xi's marathon 3.5-hour speech at the Party Congress yesterday? As Martin alluded to, it really appears that President Xi is focusing more so on reforms and is perhaps willing to accept lower growth in order to progress them.
I think this is kind of in line with what China's growth is all about right now. A delicate balance between reform as well as stability. As we've seen from the sort of past year's data of Chinese stock market movement, it really hasn't moved on a daily basis, anything more than 2% of the daily trading rate itself. So there's a big emphasis on keeping the markets actually very stable. I think with regards to sort of how the economy is going to grow, I think we at Broadridge, because of our focus very much on providing the best source of information for our clients, which are largely financial institutions and asset managers. So what they're keenly focused on, I think, will be 3 points. First of all, what is going to be the sort of, like we say, the balance between what are the new sectors that they're going to emphasize on? Is it going to be the sort of more tech sector, the one that is more emphasizing on reforms and innovation? Green energy was very much sort of on the radar itself, because President Xi was talking a lot about sort of being at the forefront and putting China on the ecological change stage itself. I think the second thing that investors and sort of our clients will be interested in is this also sort of the two-way traffic of inflows and outflows of China itself. There's been some talks about putting China really sort of on the open stage itself and allowing more foreign managers and also foreign companies to play a bigger role. So that will be something to watch for. And I think the third thing that investors and sort of anybody interested in doing business will be interested in finding out more about is the credit situation. So whether how likely is there going to be sort of measures to contain this so-called ballooning credit bubble. So that would be on the table.
And Yoon, Martin has a question for you.
Yeah.
Yoon, good morning. Thank you for joining us today. I've got a broad question for you. Yesterday we were talking about how there are concerns in the outside world that President Xi could consolidate power further, and that may mean a more active and visible hand of the state, of the government, of the party in business, including in markets. Is that your concern as well? What are you telling clients?
I think at Broadridge itself, I think because we are not political commentator itself, so our emphasis will be about playing by the rules of China, adapting to the situation that the Chinese government has actually set for the foreign managers. And China is almost like a big ship that is going to bring in investors to a particular destination where they will actually bring them greater wealth. So anybody who's interested in jumping on board will have to pay very close attention to what the Chinese government actually wants to do. So in terms of sort of government statement, I think we sort of believe that there's a lot of things that are explicit, but also implicit at the same time. We've seen quotas and we have seen measures being set up, but at the same time, if we look at some of the sort of more subtle measures, as we have seen from insurance companies that are actually playing by the rulebooks of foreign investments itself. There's been a lot of sort of soft touch to say that you do not want to even hit the sort of upper ceiling of the boundary. So those will be sort of powerful messages that can be sort of sent across the board, and that any foreign businesses will have to sort of learn to juggle this whole explicit and also implicit regulatory measures.
Yeah. Okay, Yoon, very quickly before we let you go, would it be fair to say that for inbound investment, foreign investment coming into China, there is a lot of focus and attention on consumption, the consumption story, consumer stocks, including techs. But another interesting theme might be, and I want you to talk to us about this, how are you telling clients to potentially play one belt, one road? How do you invest in something like that, that big and that broad?
I think for a lot of the clients itself, I think they are aware of this team, but they also are watching by the sides of how exactly are they going to play by this team as well. As we've said, one of the key concerns of my clients will be how involved the government is, because there's a strong belief that in order for the Asia infrastructure market to grow, there needs to be a lot more involvement from the government to offer some form of directions, but also guarantees and to bridge the gap between the public and private markets. So I think overall, our clients will be looking to the government for also a little bit more directions on where they should be heading, what are the guidelines that they should play around, and also how much support in terms of legal funding that specifically now the Chinese government is going to provide.
And just to pick up on what Martin was saying there, what about when it comes to outbound flows? He mentioned One Belt, One Road there, but Chinese money is being invested outside of China as well, and you're very well versed in that. So where's the opportunity when it comes to outbound flows in China, and where's that money going?
That's very sort of important questions to all of us at Broadridge right now, and to any sort of foreign businesses trying to get a foothold in China. So I will say that in terms of outbound flows for Chinese investors, the overseas diversification need is very strong. And as we currently look at from our database itself, what we're actually seeing that only a very, very small amount of the domestic money has actually flown outside of the system. For instance, in the insurance case, for example, I think less than sort of 2% of the entire sort of insurance balance sheet is actually invested outside of China. So the big question is where will the flows go into? I think there's a lot of interest we've seen in anything that allows them stable returns and potentially in the more developed markets itself. So US, markets have been, especially U.S. fixed income, has been a key focus a lot of the Chinese investors itself. I think the second thing, which is what everybody is very well versed to, and you can see it in the picture, is real estate. I think real estate in various forms, whether it's physical real estate or whether it's in the more sort of trust vehicles itself, have also been very popular investment choices for the Chinese investors. Yeah.
We'll leave it there. Thank you so much for joining us. We appreciate it. Thanks for that. That's Yoon Ong from. Now, to get you up to speed with the other key events that we're watching out for today, here's what you need to know.
Today in Korea, we're expecting the Bank of Korea to make a rate decision at 10 a.m. local today. Most economists surveyed are expecting there to be no change in the benchmark interest rate at 1.25%, a record low. Separately, the Bank of Korea will also be announcing their growth outlook for this year.
Day 2 of China's week-long Communist Party Congress. This as we wait for China's Q3 GDP out at 10 o'clock a.m. Hong Kong time. And that's along with September activity indicators. Hong Kong unemployment figures due out after market 4:30 p.m. And on the corporate front, sales numbers out from chip giant TSMC.
For the first time ever, the Dow begins the new trading day above the 23,000 mark, while the Dow, the NASDAQ, and the S&P 500 are all at fresh record highs. Wall Street will be watching for comments from President Trump today after he meets with Federal Reserve Chair Janet Yellen about possibly reappointing her to another 4-year term.
EU leaders are due to kick off a summit today as UK Prime Minister Theresa May continues her push to get traction into Brexit talks. In an open letter to EU citizens, May said both sides are close to getting a deal on the rights of EU nationals in Britain. But lots of other uncertainties within the group, with German Chancellor Angela Merkel's CDU party saying it will be a long road to forming a coalition after the elections. And Austria's far-right Freedom Party saying it wants the Interior Ministry role as its price for joining a coalition government. Let's bring in Jacob Kierkegaard. He's Research Fellow at the Peterson Institute for International Economics and joins us live from Washington, D.C. this morning. Jacob, thanks again for joining us. I wanted to begin on the European Summit, which begins today. There's been a change of venue, but no change of the issues at hand. Do you think we'll get any progress on Brexit out of this meeting?
No, not at all. I mean, basically, that is already settled. We know that there will be, the European leaders are essentially going to say that there has not been enough sufficient progress on the issues and that they are willing and hopeful to take it up again in December. But on substance, this will hardly be discussed, in fact. And in fact, when it is being discussed, it'll be the EU 27's internal deliberations about how to address the issue with the UK, and Theresa May will be asked to leave the room.
The EU has been very upfront with what it wants, but the UK has been pretty slow off the mark to get these negotiations to a point where real progress can be made. And of course, the British cheque is one of the key issues of contention. Do you think we need to see some sort of resolution on the financial side before we see real progress on these negotiations?
I mean, there's no doubt that if you want to move on to negotiating a potential sort of future free trade agreement or other broader economic relations between the UK and the EU 27, you need to have progress on this. Otherwise, there will be no second phase of these negotiations, which ultimately means that the UK will leave the EU in March 2019 without a deal. So yes, there needs to be money, a lot more money on the table.
Can you tell me, please, what that latest figure actually looks like?
Well, I mean, the EU has said previously that on net, something like 60 billion euros is what they consider to be the ballpark. I think we have to get pretty close to that figure. Maybe, 50, 55, and then we can debate the payment schedule. Obviously, it matters whether it's up front or paid over 10 years. But the headline figure, in my opinion, will have to be close to 60.
And Jacob, as all of this plays out, we also have the German Chancellor Angela Merkel working to form a coalition government. How would you describe progress so far on those talks?
Well, it's very early days. We had a German state election this weekend, and in fact, negotiations are just beginning now. So I think we are looking at a likely German government formation around early December, mid-December, at which point the German government can then officially begin to respond to Emmanuel Macron and for that matter also Brexit. And I think the key thing for investors to look for is whether or not the leader of the FDP party, Christian Lindner, actually takes up the position of finance minister or not. Because unless he does that, I think it's unlikely that the FDP will be a major obstacle for Angela Merkel in pursuing any sort of grand bargain on euro area reform with French President Macron.
So if that did eventuate, how do you see that implicating those euro area reforms and Germany's financial position overall? Would it be a net positive or negative for investors if he took that role?
But I think on German domestic economic policy, since he's likely to push for larger tax cuts, that would be a net positive for German domestics. But on the other hand, of course, he has taken a very tough line on mutualization of financial euro area liabilities and broader euro area integration. So on net, I'd say it'd be negative for the prospects for euro area reform, but good for German growth and inflation numbers.
Jacob, we'll leave it there. Thanks for joining us today. That's Jacob Kierkegaard of the Peterson Institute for International Economics. Data in focus Sydney side today. Jobs numbers due out at 8:30 a.m. local time. Let's get out to Matthew Taylor live in Sydney for a preview on what to expect. Matt, what do these numbers look like?
Hi there, Dan. We are expecting to see growth when it comes to the monthly jobs numbers, but let's give you a look at the pre-market action. Just a few minutes out now from the start of trade, we are eyeing a modestly higher start. Let's call it flat for the Australian market. We're up by about 7 points or so, but building on what's been a fairly strong performance for the Australian market this week, still trading around the highest levels since May of this year. Of course, we are waiting on that China GDP number crossing later on, but about an hour and a half ahead of that, jobs numbers for the month of September due. 78.46 is where we sit on the currency. We're expecting to see 15,000 jobs created over the month of September. The jobless rate seen holding steady at that level of 5.6%, which is where it's been for the last little while, hovering just around that level, as you can see on our chart right there. Elsewhere, we're watching a number of production reports out today. South 32 revealing a big drop in its coal output over the most recent quarter. We saw energy coal down by 14% in the third quarter on year, coking coal down by 66%. Elsewhere, we're watching Woodside Petroleum as well. We saw its Q3 production down by 7%. It's also cut its full-year guidance. But on the other hand, Santos Q3 production there up by 2% on quarter, and it's also raised its 2017 production guidance. Dan, back to you.
Matt, thank you. We are coming up to the end of the rundown now, but we have so much more ahead for you with Squawk Box at the top of the hour, and Bernie's here to tell us what is on the show today. Bernie, Zhao Shanghao looks like China in focus again.
Yeah, we're still trying to get our wits about us and gather our noggins after that marathon yesterday. That was Xi Jinping's 3.5-hour speech. But then again, when you only do this kind of a meeting once every half decade, I guess you got to kind of pack them and rack them high. We're going to be talking about reaction to the Congress, the opening keynote speech by Xi Jinping. Alex Capri, visiting senior fellow at the National University of Singapore Business School, will be here to talk to Marty and meet. Marty is going to be there the rest of the week in Beijing to discuss the ramifications for socialism with Chinese characteristics. We're also going to talk about the possibility of an extension of OPEC-led oil production cuts with Faradin Fesharaki, who's the chairman of energy consultancy FGE, and Leland Miller, the CEO of China Beige Book International, will be with us. Not only are we going to try to interpret socialism with Chinese characteristics by Xi Jinping, but we also got a big GDP report today, which we will dig into. So, Dan, we're going to be having lots of fun today, and we won't be waiting 3.5 hours for a speech to finish. Could have read War and Peace in that time, frankly.